Did you think mastering the pre-off horse racing markets on Betfair was going to be easy? Well, when I first started my trading journey, I thought this as well. I analysed hundreds and hundreds of horse races and I collected tons of data, fine-tuning my strategies along the way, which eventually led me to making long-term, consistent profits out of the market. But wow, was it a grind in order to achieve this. So to make your trading journey in the markets 10 times more efficient, here are the top 5 lessons which I wish that I had learned much sooner. These lessons would have completely cut my learning curve in half and would have allowed me to get to the end destination of making profits out of the markets 10 times faster. So one of the earlier lessons that I learned with my pre-off horse racing trading is to not to chase the market and not to chase the price around. So for example, if you can see a favourite is getting backing support and that backing support continues to persist and is developing into quite a significant trend, from a psychological perspective and as a human being, the temptation is to follow that trend and follow along with what everybody else is doing. Because if everybody else is doing something, i.e. backing the favourite, then that must be the right thing to do. However, with pre-off horse racing markets, what I've found is that trends do not just go on forever and a day. So what'll happen if you're constantly looking to chase the price around and follow trends like this is that now and again you'll get it right and you'll make a profit for doing that, and it'll feel really good. It'll feel like you really know what you're doing in the markets and you really start to smash the markets and make profit out of them. But more often than not, the trend will just start to regress gradually back to where the start of the trend started to occur, if that makes sense. So I've found that being successful at this is all about being one of the first people to spot the trend in the first place. Now, of course, it's unlikely that you'll be the first person in the entirety of the market to spot a trend on a runner, but I would say if you're in the top 20% of people who spot the trend before everybody else, you'll be well on your way to making long-term profits out of the market. But the thing is, because it's so psychologically ingrained and hardwired into our brains as human beings to follow along with what everybody else is doing and follow trends and fear missing out and fear looking stupid and all those sort of things that you associate with cognitive biases and cognition error, it does present a problem. But you'll just have to trust me on this one. If you're able to get in the market and be a trend setter as opposed to a trend follower, it will pay dividends beyond belief. It takes experience to spot these trends in the first place, and it requires you to be brave, putting your money into the market before anybody else follows along with a trend. But like I said, it will pay dividends over the long term and you will reap the rewards in profits if you're able to do this and spot trends before they occur. So if you've been in the markets for a little while, you've probably noticed the phenomenon that occurs when 2 minutes hit the clock in each of the pre-off horse racing markets. So what do I mean by this? Well, at 2 minutes before the start of each race, the liquidity in the market absolutely skyrockets and the market can go from looking pretty calm and pretty relaxed to absolute chaos once that 2 minutes hits the clock. Now, if you've never noticed this yourself, load up a pre-off horse racing market on your software, look at the clock in the top left-hand corner, and once that hits 2 minutes, you'll notice a clear, undeniable pattern occurs and the market goes from pretty calm to pretty chaotic as soon as that 2 minute mark hits the clock. And I've even quantified this using this tool right here, which shows that the liquidity skyrockets and goes through the roof at this 2 minute point. Now, you might be asking, well, what is going on at this point? Well, it's unclear exactly why this always occurs at exactly 2 minutes. However, predominantly this activity is hedging which is going on in the market. So for example, if a runner's been backed in significantly, at 2 minutes you'd expect a bit of hedging to pull the price back up, and vice versa. If the runner's been going on a pretty significant drift, you would expect hedging to pull the price down somewhat as well. However, this doesn't always occur like this. So say, for example, you've got a favourite what's been backed in significantly, at the 2 minute mark, it then might get backed in a further 25 ticks, and all the backing may override any subsequent hedging which goes on at this point. So I think it goes without saying, as a pre-off horse racing trader, understanding what is going on at this 2 minute mark and understanding what is likely to be the next move in price on each of the runners is something that is really important. And I spent a long time figuring out exactly how and why this occurs, and how I did that, well, that ties into the next lesson that we're going to jump into. So next up, collecting data has really helped me understand how the market works and as a result earn profits off the back of it. Now, I collect loads of data for loads of different things all across the market, and one of those things happens to be understanding the 2 minute mark. So I go through loads of different setups at the 2 minute mark and collect loads of different data around this point to try and understand when a horse is likely to go back on a drift if it's been backed in significantly as a result of the hedging, or when the hedging is not going to be able to override a backing gamble which is taking place on the runner, which will pull the price down significantly. And of course, it does differ from setup to setup, but with my data, what I found was a pattern tended to emerge, and obviously I use that pattern to my advantage so I can make money off the back of it. So you might be asking yourself, well, how can I start collecting my own data out of the markets myself so I can try and develop some form of edge like this and develop a strategy around it? Now, the way I do it is by using my trading software, and I use BetAngel Professional. And what I do is I typically collect loads of different stored values, export them, and then I sort of format them in Excel so it's presented in a nice, easy way so I can understand what I'm looking at, and then I go from there, basically. Now, if there's enough interest in collecting data and developing your own strategies by using the data, I might make some videos around how you can collect your data and build strategies off the back of it. But I'm aware that a lot of people might not want to get into the nitty-gritty and into the weeds of collecting your data and doing that kind of complicated stuff. So what you might be interested in is joining my email community. Now, I typically try and send out about 1 email a week, providing as much value as I can around strategies that I use to make money based on the data that I've collected in the markets. Now, I've got loads of like-minded traders who I'm sending emails to on a weekly basis, and like I said, we're covering things such as strategies that I'm using to make money out of the market. I'm giving away little bot files which will make your trading much more efficient, and just in general giving away little hacks and sneaky trading tricks that you can use in the market to be as efficient as you can and make as much money off the back of it. So if you do want to take advantage of all the value that I'm giving away completely free, then check out the email list using the link down below in the description. Like I said, I try and drop an email to my subscribers about once a week, giving away as much value as I can. So next up, emotional intelligence, or EQ. Now, I'm a firm believer that having a high level of EQ, emotional intelligence, will get you much further in the markets and earn you much more money out of the markets than somebody that has a higher level of IQ, which is obviously just natural intelligence. Now, I say this because I'm obviously no brain surgeon myself, and a lot of other traders that I know who are also long-term profitable from the market aren't super impressive maths, whiz kid prodigies or anything like that, with respect. They're no dummies either, but a lot of them do have a high level of emotional intelligence, and I believe there'll be people out there with a high level of IQ, so natural intelligence, earning much less money than this, who aren't probably that as in touch with their own internal psychology. And when you're pre-off horse racing trading and you're in the pre-off horse racing markets, that is obviously a really important skill to excel in. So the more that you can keep a level head in the markets, the more likely it is that you'll make long-term consistent profits from your trading. At least that's what I've found. So the most obvious thing that springs to mind is getting really annoyed and really enraged when you take a big loss, and on the flip side of that, feeling absolute euphoria and absolute joy when you take a big win. I think that you need to get pretty good at just keeping a level head with each result and with each market that goes by. So if you get a big win, that's fine, absolutely brilliant. But if you get a big loss at the same time, that's fine, and the world moves on. You just keep a nice level-headed approach to what you're doing. Now, of course, the price can only go up or go down. So with each market that you're in, you have a 50-50 chance of defining which direction the price is going to move in. Now, this means that even if you have no skill and you fundamentally just don't know what you're doing, over the long term, your strike rate should average out at about 50%, and your profit and loss shouldn't really take that much of a hit. Like I said, even if you don't have any skill and you don't know what you're doing in the markets. I'm not saying you don't, I'm just saying that will happen over the long term. So all the noise in between, the rush of the big win and the absolute despair of the big loss, it's all just kind of an irrelevance when you think about it, because everything is just going to average together and pretty much meet in the middle and end up at nothing if you have no skill and if you don't know what you're doing in the market. So the point that I'm trying to make is try and just keep a level head when you're making your decisions in the market with each market that goes by, and keep that emotional intelligence in check. And you'll find that keeping that EQ in check has a big bearing on your success over the long term. So when you do build an edge in the market, you'll sit at around a 60 or 70% strike rate, somewhere in between the two, I would say, with your wins from your winning trades exceeding your losses from your losing trades, fundamentally, of course, making money over the long term. Now, next up, something I feel is really important is understanding fundamentally where your edge as a pre-off horse racing trader is coming from. I don't think it's good enough to just say, wow, that worked and that made money, fantastic, let's move on to the next market. I feel like it's important to understand why the strategy that you're using or whatever it is that you're doing is working and is making you money over the long term. Now, when I was new to my trading journey, I had a much shorter term perspective, and I did think a little bit like that. So things like, if there's more money at one tick than the other tick, then quickly get involved in the market and try and make a quick profit like that. Now, to be fair, I did purchase some really cheap poor quality courses when I was first starting out, which did kind of align with this type of thinking. And by the way, they didn't get me anywhere and didn't provide me with any results, and actually pointed me in the wrong direction because they were providing me with bad advice, which I now know is bad advice after spending years in the market myself. But rather interestingly, I actually get comments off people asking similar type questions like this, which all have a kind of, similar type feel. So it'll be things like, if the money's bigger at this tick than it is at this tick and X occurs, then instantly put your bet into the market dead quick and try and make a profit. Things like that, little arbitrary, weird little rules and things like that, which I understand because I used to think like that myself when I was starting out. Now, in actuality, I don't think this is how you should trade the markets, and I think people who are trying to trade short-term noise like this won't make any money over the long term, if that makes sense. Now, what has worked for me, and in my opinion, and the way that I trade the market, is trying to understand what makes the market move, where the edge is coming from for me as a pre-off horse racing trader, and defining where the price is now and where the price is likely to be in a few minutes' time based on the criteria that you've got inside your head. So for example, you might be looking at live pictures and see that the favourite is sweating up, it's refusing to go into the stalls. So I might say to myself, okay, the price is here and I expect the price will end up somewhere up here, so it'll go on a drift, because of the things and the criteria that I can see going on the course. Now, you won't be trying to just take a random tick or two out of the market if you could see that going on the live pictures, would you? Or for example, it could be something more exclusive to the market itself. So you might say, I think the favourite is going to get back in support and a gamble's going to develop on the favourite because it's naturally the shortest price in the market. The second favourite's priced all the way up at 7. And I can already see a bit of persistent backing starting to occur on the favourite itself. So I'm thinking the price is going to start here, and a few minutes later it's going to end up down here based on this criteria. Everything that's happening in the interim and all the short-term noise is just that. It's just short-term noise, which doesn't have any long-term bearing over the price movement. So the way I trade, and the lesson that I learned, is you should define where the price is now, where you expect the price is likely to be in the next few minutes, and trade based on that criteria. And on the flip side of that, you should also have an area or a price set as a sort of a stop loss area where you would define your trade as going wrong and ignore all the random arbitrary weird little things going on in the interim. Now, I appreciate some of the stuff that I've mentioned in this video can be a little bit complicated. So if you want to work with me, take my training program and completely cut your learning curve in half, and importantly, be provided with the blueprint to a winning trading strategy which makes me money out of the markets each and every month, then check out my training program using the link down below in the description. So if you're looking for results and you're looking to get from A to B as quickly and as efficiently as possible, whilst having all the unnecessary fluff and bad information stripped away so you get the results as quick as possible, then this training program is what you've been looking for in the pre-off horse racing markets. And next up, you should check out this video which has just popped up on screen now, and that'll show me implementing a strategy on the favourite in 2 separate races 10 minutes apart and locking in over £40 really easily.